Hi, I'm Nick Dukoff, Head of Institutional Growth at the Solana Foundation, and you're watching Taking Stock.
2 minutes to go into the close. What a wild session here on Wall Street on this Wednesday, February 4th. Who better to kick off the broadcast at this hour for this edition of Taking Stock than the great Einstein of Wall Street himself, the one and only Peter Tuchman. What'd you see here into the closing auction? What a weird day today.
Completely strange. I mean, we were for sale heavy all afternoon, and then on the close it posted to buy. We've got huge volume. Think about it. We're normally about 1.1 billion a day down here on the floor, and every day since the beginning of February, it's been as much as 1.5 billion. That's a 30% increase in volume. What you're seeing is it's kind of curious because even yesterday with a down day, you have advanced declines is up versus down, right? Yesterday was 2-1 advances versus declines when the market was, we think about this, Monday and Tuesday, right? Monday we came in down and closed up. Yesterday we came in up and closed down. They were mirror images of each other, which is all happens sometimes, but it's something people should just keep an eye on. Advance versus declines gives you a little insight into what's going on. There's a lot of rotation going on here. Money is being put to work here, and the people are just, look, they're positioning themselves, right? They're getting out of things that are sort of becoming painful for them, and they're getting into some mid-cap, small-cap, which, is where they're finding value.
Yeah, and we're seeing that rotation out of tech, out of telecom, out of discretionary, into real estate, into energy, into materials, that defensive posturing for the tape. Thanks for kicking us off as always, Peter.
Always
great to have you. Skylar, grab your mic. Time for the bell. And there you have it. At this hour, the team from Radiant officially bringing about a close to today's trading here on Wall Street. Your final tail of the tape. But what a weird day it is, as Einstein just laid out for us, because the tech-heavy NASDAQ is down about 1.5%. You don't frequently see the NASDAQ down that much with the Dow Jones Industrial Average in positive territory, but the Dow is up 0.5%. Downward pressure on the S&P 500, as well as the small caps. That one perhaps to be expected when you look at the other major market indexes, but the New York Stock Exchange Composite Index here holding on to a fresh, I believe, all-time high for the NYSE Composite. How about that at 22,978? Let's bring in our good pal Eric Criscolo, market strategist here at the New York Stock Exchange. You and I were talking 5 minutes before the close about maybe some of these big tech names that had really been leading losses to the downside, maybe hitting some technical levels, a little bit of a bounce back into the closing auction. What'd you say?
Yeah, we saw software kind of hit a trough, hit a bottom, kind of started to get a bid around noon. So buyers started to come into those names. They certainly didn't push everything into the green, but they kind of stabilized losses. And that kind of took the tech sector higher. That was part of the rally. Why you saw the S&P kind of get back to the 68.90 level that we are right now.
Yeah, did you see today as a little bit of the Anthropic hangover story from yesterday? I mean, they introduced this new productivity suites, and people said, uh-oh, what about clerical administrative work, legal services work, and suddenly all the SaaS, software as a company giants, have they been absolutely throttled here the last 48 hours?
Yeah, I mean, software has been under pressure for a while because of that theme, and you saw with that Anthropic news yesterday, it just, everything just exploded, and it would just sell everything, no matter what, indiscriminate selling across the whole sector. So that continued today, but then again, buyers kind of stepped in a little bit toward the end of the day, kind of stabilized everything a little bit.
Maybe hitting some short-term oversold levels that
definitely.
Maybe sets the stage for the last 2 trading days of the week. But of course, we've also got, as if all that weren't enough, and general Fed macro noise. How about earnings? We got a big one today. We got Amazon tomorrow after the bell. How have the big tech earnings season gone so far, and what are some of the things, Eric, you'll be paying attention to between now and the end of the week?
Yeah, I mean, you're seeing kind of, really high bars that have been set, and it's really hard to clear those bars. AMD had a good print. They beat numbers. They had good guidance, but they were down 10-15%. So the hurdle rate is exceptionally high. Some of these names have just seen massive moves. They've taken the whole stock market up for 3 years. It wouldn't be surprising if after great numbers, these stocks do come in a little bit. So that's that. It wouldn't be shocking at all if that happens.
It's really interesting to look at some of the sectors that caught a bid, and there weren't a lot of them, but the oil and energy stocks today did. The home builders did so well, but you got some of these falling knives as well. Semiconductors down. You mentioned AMD. Software names led down by Palantir. Robinhood for the fintech space also down throughout most of the day, 10-11% or so.
Yeah, some of the financial services names, the exchanges, especially if you're linked anywhere to crypto. Crypto has been absolutely unable to get off the mat, constantly making lower lows. Bitcoin is now kind of at some key levels around 7,800, 75,000. Excuse me. So those are kind of numbers that it hit several last year, 2 years ago.
Yeah.
So it's trying to hold those levels, but there's just nothing going on right now, and so all those names that are linked to crypto they just can't get going right now.
I mean, maybe a key long-term support level for Bitcoin right around 70, 72. That's where we were before election day of 2024. Obviously, after the election results, we saw the crypto majors kind of skyrocket. Now we've fallen so much, we're kind of retesting those. Before I let you go, anything else on your radar, big catalyst you'll be paying attention to in the next few trading sessions here on Wall Street?
I think really it's just earnings. We're going to have some delayed employment data come out next week, so that's an unfortunate byproduct of the shutdown, but luckily that didn't last too long. But I think everyone's just focused on earnings, focused on tech earnings right now, and then of course the Super Bowl.
Of course, the Super Bowl. Do you have a prediction there?
I don't make predictions at the New York Stock Exchange.
I've asked you this before, and that's always your answer. That's a good market strategist right there. I do think Seattle's favored, though, for whatever that's worth.
Sounds like a good play.
Sounds about right there. The great Eric Riscolo, market strategist at the New York Stock Exchange. Anything can happen on Super Bowl Sunday, though. Thanks for kicking us off. Nice to have you here.
Happy to be here.
Skylar, grab your mic. Jeff, you and I will head this way and go for a walk. We're going to bring you the latest poly market odds as participants try and weigh in on the question, how many short-term interest rate cuts will we get from the Fed between now and the end of 2026? Kind of an interesting divergence between poly market participants and the CME Group FedWatch tool, because CME participants say, no, we're probably only going to get 2 cuts between now and the end of the year, but there are 25% odds we get 3 cuts, according to poly market participants, of 25 basis points each. 24% odds right behind, we only get 2 cuts. 15% odds, we get 1 cut. 8% chance, poly market participants say, no, the Fed's work is probably done. More than $4 million in total trade volume on this particular event contract. 2 more FOMC meetings with Jerome Powell, the June 16th and 17th 2-day policy meeting. That would be the first one for Kevin Warsh, of course, pending Senate confirmation. Time to take a quick look here at 2 NYSE notables on the day. How about we'll start with MGM, one of the best performing stocks in the S&P 500 today. Last calendar year, 2025, proved to be a record year for MGM. Rapid growth in Q4, net revenue up almost 40% year over year. This did give a bit of a boost to some other comparable names like Flutter and DraftKings as well. The stock is up 4% so far on the year, despite receiving a few analyst downgrades from Truist as well as Morgan Stanley. Finally, let's pivot around this way. We'll take a look at one of the healthcare giants. How about Eli Lilly's session here today? A beat on top and bottom line, not quite reclaiming previous all-time highs, but honestly, it's not really very far off. Shares jumping on a positive revenue forecast for Lilly in 2026. They are partnering with the U.S. government to improve access to obesity drugs. The stock is only up about 2% so far here in the year, but is up more than 35% over the last 52 weeks. All right, moving on with the broadcast at this hour. Cheddar's very own Chris Castellino is now back with the latest in health tech from CES 2026 in Las Vegas, Nevada. Take a look.
From the toilet to the toothbrush, a new wave of AI-powered devices is putting preventative care directly into our hands. At CES 2026, these new products promise to catch health issues before they become serious problems, and may potentially save us thousands of dollars in medical costs along the way. Let's start where you might least expect cutting-edge health technology: the toilet. Startup Throne has developed what they're calling the first AI-powered gut health and hydration monitor, a device that attaches to your toilet to analyze what's happening every time you use the bathroom.
Throne is a device that tracks gut health, urinary function, bathroom habits, and hydration, hands-free every time you go to the bathroom. So we built this because there are tens of millions of Americans with mystery gut health issues, and they have no clarity on what's actually causing it.
The technology behind Throne involves a camera and microphone system that points directly into the toilet bowl. When you approach, the device identifies who you are through your phone's Bluetooth signal, then automatically begins its analysis.
We use about a dozen different AI models to interpret what just happened inside the toilet. We track stool frequency, consistency, color, volume, how hydrated you were, the timeline that you were on the toilet, how long it took you to have your first movement, which is like a proxy to how much evacuative effort or strain you're having. And ultimately, we use all this data to help you connect the dots between your diet and your lifestyle and what's happening in your gut, so you can identify triggers, sensitivities, and intolerances. Basically, the idea is to help you understand what's normal for you, and when you're deviating, what can help you get back to normal.
Behind Throne is John Capodilupo, who previously co-founded popular fitness wearable Whoop. He views toilet monitoring as the next frontier in at-home self-care.
We throw away our waste every day, whether that's stool or urine. We have no information at all. With Throne, now the idea is to capture that, get that same level of longitudinal data that we had at Whoop, and provide unprecedented levels of insight to gut health and hydration. Trained on a huge data set that was labeled by professional GI doctors, and then our AI takes that data set and analyzes your stool to give you information about your gut health.
In addition to tracking gut health and hydration, one of the fun things we do is track urinary flow rate and urine function. So this is really a men's health metric. It's one of the primary metrics for prostate health. So if you pee standing up, the volume of the sound of the pee stream entering the water maps 1-to-1 to the strength of your flow rate. And so we built an AI model that uses computer vision to basically map the sound of your flow to the flow rate, and then we can integrate that to get the volume, and so we can track the peak flow rate. We basically can track prostate health every time you go.
Throne launches at $400 and a $6 monthly subscription for the AI analysis and app features. Another trending category in smart health promises to help users monitor dental conditions at home without frequent trips to the dentist. Introducing Y-Brush. Their flagship product claims to brush all of your teeth in just 20 seconds. But the real innovation is their new AI-powered dental health platform. The technology is called SmartNose, an electronic sensor equipped with AI that detects chemical patterns in your breath. When you breathe, you release volatile organic compounds, which are chemical biomarkers that can indicate various health conditions.
Because it's not only one biomarker, but several. We can say, okay, there are some signs of diabetes, of living disorders, of periodontal disease. It's passive, you don't have to go to the doctor. There's another app for the dentist and for the GP. They will get automatically information from the AI sensor.
The company's Halo AI is expected to release in 2027. Another company is tackling dental health from a different angle, introducing Gum AI. They've created an app that uses AI to analyze photos of your mouth, providing instant oral health assessments using just your smartphone. No additional hardware required. The platform can detect issues like plaque buildup, gum disease, and other oral health conditions that might otherwise go unnoticed between dental visits. The founder sees the technology as a way to bring oral health monitoring to people who might not have regular access to dentists.
Not everyone can afford seeing a dentist, and some may not be living in an area that they are dentists. So in this case, our AI can help, because you just need a smartphone, and then you can have access to a certain level of oral health care.
Gum AI currently operates on a subscription model, with the company providing access to organizations like NGOs that serve senior citizens and community health groups. Our daily routines have now become data gathering opportunities, where health problems can be detected before they become expensive emergencies. For Cheddar, I'm Chris Castellino.
Let's do it, folks. Welcome back to the broadcast. You are watching Taking Stock live from the trading floor of the New York Stock Exchange. Time now for the latest headlines in the world of fintech, crypto, and artificial intelligence headlines you need for your afternoon. First up, the crypto majors all down in a pretty notable way, as Eric Criscolo and I were breaking down in the last block. Bitcoin and ETH both down about 3%. Solana, the hardest hit at this hour, down 7.5%. Next up, Bloomberg reporting NVIDIA nearing a $20 billion investment into OpenAI, a move that would mark NVIDIA's largest investment ever as big tech pours more capital into the AI arms race. I'm laughing because a lot's been made about NVIDIA and OpenAI the last few days. Finally, Google spending more than $4.5 billion to acquire wind and solar developer Intersect. It's a move designed to secure dedicated electricity for its fast-growing AI data centers and get a leg up on rivals facing grid bottlenecks. Brian Anderson joins us now here on the show at the FinTech TV booth. He is the CEO of Barrel Proof Technologies. Great to have you here. Thanks for being here.
Thank you for having me, JD. I'm really excited to be here.
So you and I were talking during the break we just had. I was fascinated with the work that you and your firm do. Break it down. What is Barrel Proof all about for anyone a bit unfamiliar, Brian?
Absolutely. So Barrel Proof is making aged spirits barrels bankable assets by really paying attention to infrastructure level banking, insurance and financial assets. So we're really paying attention to what distillers need for better insurance, better blending rates, and just optimizing the entire system.
That is fascinating. Talk to me a bit about what was missing in the marketplace previously. What are kind of those pain points for the industry that you felt, aha, hold on, I've got a new idea that could help a lot of people?
Absolutely. So the distilling space is unique, that it is based in tradition, and we're bringing a little bit of art and science to this by merging the use of IoT, AI, and blockchain. So the industry does not really know what's in their barrels after year one because of evaporation. They could lose up to 10% year one and 1 to 6% year after year. So in 5 years, you could lose upwards of 25% or more of your barrels. Industry doesn't know what's in their barrels other than weighing it. So we're coming into the space saying, you don't need to do all this labor, because they don't. Now it's at your fingertips.
When you're working with these distillers, does this take a lot of convincing for them? Because I imagine you deal with a lot of these family legacy brands. They're used to doing things a certain way for a long time, or are they pretty eager to comparably, much like yourself, be forward thinking and sort of embrace a lot of these new technologies?
The industry's welcomed it. I think they realize that data is going to be king as we move forward in matronomics, really paying attention to welcoming the use of IoT, because if you don't know what's in your barrel, you're not going to be able to make better decisions. So when it's indexed and we know what's in the barrel, we can make better financial decisions.
What most excites you about where the technology is right now? And is there still more work to be done?
Yes. So at the end of the day, the industry for spirits is just our first beachhead. We're looking at other industries as well, but if you can know what's inside a sealed container space, you can better insure it, you can reduce risk. Insurance companies go from, loss avoidance to loss prevention. So we're not loss modeling anymore. We can just say, okay, we know what's happening. How can we monetize, financialize, and collateralize this on the blockchain, and using AI to really hit home things that just they've never been able to see before. These are unparalleled insights into the barrel.
Yeah. What sort of feedback are you getting in real time from the clients and really the distillers themselves? As maybe for a lot of them, this is kind of their first foray into a lot of this technology.
So the industry's been looking at technology for a while. Ours is just the first one with the moat that beats everybody else. We are completely non-invasive. Our sensors sit on the barrel head, and so the sensors measure hard data points. The AI takes that information and we give the barrels a voice. So the AI takes that information, spits out unparalleled insights, and then the blockchain keeps it real.
Brian, I'm about out of time. Quickly, if we can, what else is on the horizon for you and the firm in 2026?
So we're looking to finish, getting devices on barrels and looking at other industries like oil, pharmaceuticals, looking at, consumer packaged goods, any high-end luxury, liquids, whether that be other spirits and, consumer packaged goods.
That's awesome. Brian Anderson, CEO of Barrel Proof Technologies. Congratulations. Thanks for visiting us here at the Big Board. Come back anytime.
Thank you, JD.
Don't go anywhere. Much more Taking Stock coming up after this. Let's do it, folks. Welcome back to the show. Time now for a few headlines in startups, raises, and rounds. First up, the team from Y Combinator will begin offering startup funding in USDC, beginning with its spring 2026 batch, signaling growing mainstream acceptance of stablecoins as a faster, cheaper way for founders to move capital around the globe. Next up, AI farming startup Carbon Robotics unveiling a new model that can instantly identify and target weeds in real time, helping to push autonomous agriculture into the era of precision. And finally, Waymo raising $16 billion at a new $126 billion valuation as the Alphabet-owned company moves to rapidly scale its driverless taxi fleet. All right, joining the broadcast now are two very special guests down here as well. Say hello first to Richard Watson, CEO of Inigo, and Rick Thornberry, CEO of Radian. Nice to have both you gentlemen down here. Thanks for being here.
Great to be here. Great to be here. Thank you.
An absolute pleasure to be here.
Absolutely. First of all, can I get your experience for you guys? You had an amazing group down here to ring the closing bell. What was the experience like? I'll start with you.
Mind-blowing. This is something you've seen throughout your life, and then suddenly to be part of it and to be part of this marketplace is an extraordinary privilege.
Yeah,
I feel very blessed.
Yeah, Rick, how about yourself?
Each time I've been here before, but each time I'm here it's special. And what made it special today is we brought both teams together, so they were able to spend time, enjoy the celebration together, and just had a good time.
Well, let's talk about those two teams. I'll start with Radian because we got the stock chart up right over your shoulder. A strong day for kind of a wonky tape overall, up more than 2%. Talk to me about what Radian is all about and some of your top priorities here in early 2026.
So Radian has historically been a mortgage insurance company serving homeowners across the country, helping first-time homebuyers be in a position to buy their home, so home ownership at the center of our thesis. But with this acquisition, we really emerged from a monoline U.S. insurance company to a global specialty, multi-line specialty insurance company. And so the combination that Richard and I come together to put together here, these two companies, is something special. So we look forward to kind of 26, making the best of these two companies, kind of coming together in partnership and charting an exciting path to the future.
What does this look like from the Inigo side of things for you?
A privilege to be part of the Radian Group. From my point of view, I've got 250 people who are motivated, excited, want to get in front of customers, want to do something different. And the Radian Group gives us the stability to go and do that day in, day out, week in, week out. So for all of us, we're over the moon. This means we can get back in front of customers doing what we love.
Rick, why is right now the right time for this type of partnership? We talk a lot about mergers and acquisitions and general relationships across industries. I'm always fascinated with the timing. Is it macroeconomic conditions? Are there other things that go into a decision?
I think it's largely strategic, just looking at ways for us to diversify our business into other opportunities from a revenue point of view. These two businesses are non-correlated from a risk point of view. The combination actually doubles Radian's revenues. It's immediately accretive. We had the capital to do the transaction within our own balance sheet. So when it comes together, it's really actually a very attractive financial transaction. But I would say the reason it works is the cultural match, the chemistry match, the strategic kind of alignment between risk, data and analytics, customer focus, employee culture. So it's been, I think we can look at the numbers and say this is really financially attractive. But the thing that probably excites Richard and I both is how it culturally fits. Two companies come together that actually value the same thing.
I love the culture component about this. What are some of those core values important to Inigo that you think really make this a relationship that makes sense?
So for us, we really win when we park our ego. We put the ego aside, we collaborate well, we turn up with real energy and enthusiasm. And if you do that day in, day out, it's amazing what happens. That's an environment that smart, driven people really want to be part of. And our success is keeping, developing those amazing people.
That's awesome. I'm almost out of time, but quickly for either of you, Jeff, if you can give me some sense of what the rest of 2026 looks like now that this is kind of official for both your firms.
It's the beginning of a great journey, a beginning of a great partnership. And I think you can see from the team that came together today kind of how excited people are. So I look at it as we're day 3 of a very exciting journey. I think 26 is the first year of that long-term path. So we're excited to get this done and behind us, get the two teams together. Richard and I have spent a lot of time together plotting this out, so I think we're excited.
Yeah, an absolute sense of excitement and opportunity. So for us, thrilled. I'm just really, really thrilled.
Amazing. Congratulations to both
Thank
of you
you
guys,
so
all of
much.
your
I
companies
appreciate
as
that.
well. Come back and visit us here at the New York Stock Exchange anytime.
Very nice.
Folks, don't go anywhere. Much more Taking Stock coming up after this quick break.
Welcome back. I'm Scarlett Sieber with Money 2020, and this is how fintech companies actually make money. Because honestly, you get a lot of the hype and the lines, but what is actually happening underneath the surface? Today, we're going to be breaking down the fintech known as Kalshi, the regulated exchange where you don't just read the news, you trade it. Kalshi lists tradable yes-no contracts on real-world outcomes. Think inflation prints, Fed decisions, GDP surprises, and cultural moments. Each contract settles to $1 or $0. That simplicity, price, the collective belief, settle cleanly, drives participation and, more importantly, fee revenue. So how does this Kalshi actually make that money? First, transaction fees on every buy and sell. Volume is the revenue engine. Second, listing and market creation. High demand contracts attract liquidity, and liquidity attracts, you guessed it, fees. Third, professional data and access. Premium fees and APIs for market makers and quants. They love those premium accesses. And fourth, institutional programs. Liquidity support and analytics that deepen participation and keep spreads tight. Why now? In late 2025, Kalshi reportedly raised $1 billion after $300 million just weeks prior, putting its valuation near $11 billion. That kind of capital concentration says prediction markets have moved from curiosity to venue economics. The moat is the liquidity flywheel. More traders tighten those spreads, tighter spreads draw more traders, backed by regulatory footing and product clarity. The reality check here is category education matters, policy optics matter, and sustained participation beyond headline spikes also really matter. But this overall thesis is very powerful. Kalshi monetizes curiosity, and we all like those innately curious people in our lives. Price the probability, charge the fee, repeat at scale over and over again. Own the event and you own the economics of attention, which is something that is not easy to do anymore. That's not just fintech, it's reality priced. And that's how Kalshi actually makes money. Have any other companies that you want us to put on the show to talk about the breakdown of their revenue? Listen below and we'll see if your company makes the cut. Back over to you.
All right, at this hour, Alphabet shares are down at least a little bit here after reporting just moments ago, despite a beat on both the top and the bottom line. The company reporting earnings a share of $282 versus the street's expectations of $263. However, the company projecting a significant boost in overall AI spend, expecting to nearly double its over 2025 spend. We'll bring you much more on tomorrow's show. That's it for today's edition of Taking Stock. Have a good one. We'll see you tomorrow.